All right, folks, here we are on Trading Up. We've got James Storms in the house. We've just done an awesome podcast. You've got to go and check it out. Link underneath the video here. He's about to walk us through a US30 trade that he took. He mentioned it in the podcast where he that was the one that took you to, remind me.
Yeah, that was the one that got my account to 1 million actually.
Exactly. And then we're going to jump into the current price on US30, which is currently 15th of January 2022. And he's going to give us like his sort of views on where he thinks that he might get into a trade, and we'll do it before and after on that as well. So, James, over to you, mate. Share your screen and let's get onto it. Hey folks, my sponsors City Traders Imperium have just launched some amazing changes to their funded trader program you got to check out. You can now skip the whole evaluation, trade gold as well as Forex, plus they've increased the drawdown you're allowed in both the evaluation and when funded. With C2A, it's even faster and easier to reach up to $4 million in funding with a 50 to 70% profit share. Click the link in the description to find out what else has changed.
So this was the trade I spoke about a little while ago. Couple key things going on here. So first things first, I kind of like, the price that I'm trading at is very important to me. So like, a lot of people know about quarters theory. I use it very simply, but for people that don't know, it's they're like round psychological numbers in the market. Anything that ends in 250, 500, 750s or zeros for the most part. They tend to be areas of high volume where the market kind of like has a large exchange of orders. People put their stop losses there. They put pending orders. There's a big exchange that goes on at these levels. So couple things here going on. I trade a lot of supply and demand, like I said. Generally, I draw them off the supplier demand zones off the daily. I don't go lower than H4. In this scenario, it was an H4 zone that I drew. So we can see this is what the market looked like here. So this was a big like overall momentum shift and a break of structure. A lot of sellers stepped into the market here on the daily. This was a break of structure. We took out these lows here. So, I just going in with that, I kind of, this is me formulating my bias, right? So we had that daily break of structure, and then this is the counter trend here on like H4, right? And then we actually took out the higher lows here on H4. So now we have like I said, earlier, you want to see you're always going to have that main trending move, and then there's always going to be that retracement that happens. So once you see the lower time frames start to kind of start to flow in the main trend that you're looking at, that's more confirmation. So I'd seen that we kind of H4 broke structure here, and then we retested that previous lower high. So that's kind of going to be like my invalidation point. I actually got in the trade. This is like an H4 supply here. So, I usually just draw the zones out of the wick. And then again, I also mentioned the tapering news. So the Federal Reserve announced that they were going to start tapering the markets. I believe it was August 27th on Friday, if I'm not mistaken. Yeah. So I ended up entering on the trade on this candle here.
So you might want to move it to the right a bit because your little picture will be covering the thing.
Okay, yeah. So I didn't want to show too much of the after, but no, it's fine. So I entered the trade right around this candle. I gave it some room, like I told you before. Like I'd rather give the trade room and then be a hero with the stop loss. But generally, like I picked my points and structure, lower highs, higher lows, and kind of base my stop losses off of that. So I don't remember exactly how I maneuvered around, but I remember I had the balance on the trade was like about 200 something thousand when I first entered the trade. And my entries, I didn't have the best entries. I had like entries like somewhere around like here. And then my stop was kind of like above these overall highs to the left here. So the market opened up on Sunday here, and we actually spiked above the highs. I think I had I don't remember exactly, but I think I had the stop like very tighter than I would normally would have. And then it kind of started breaking structure, and I was like, all right, I need to give it a little more room. So I just gave it, an extra 10 or 15 points, something like that. The stop I had was at 530. So can I move that? 523. So the stop I had was 530 right here. And yeah, so as the trade was kind of playing out, I just started gaining more confidence. I'm like, all right, cool. Well, it made a new low here, and then it made a new low, and it just started showing me that, it started playing out. So every time the market, basically after it broke structure, this little like higher low here, after that happened, I added more balance because I didn't have the best entries. So I wanted to get better entries, you know. So pretty much I added like another, I think about 100,000 or something like that. Remember, I started the balance was about like 250 or 300,000 when I first started. And then I ended up by the end of the trade, it was about 600,000. So I ended up adding about an extra $300,000 as this trade is developing and as I'm adding more entries. So I actually have the screenshots of the I could send them to you. You want to include them in the video? Like I took
Yeah.
screenshots of my drawdown and everything like as the trade is playing out. So I can show you guys all that as well. But yeah, so I had more entries here. Somewhere I think my best entry in the trade was about 35,480. Again with that same stop loss. And I had about three different occasions. I added a bunch of different entries. So let's just say for the sake of it, I had like three entries like that basically. It was 50 entries technically, but I had three scenarios where I was scaling into the trade basically. So yeah, so like I said, it was a lot of back and forth. It was I was in a little profit and then back in drawdown. Then I'm in more 100K profit. Then I'm in drawdown, 100,000. I think this was when I was up about yeah, I'm pretty sure if I go to I don't want to go to H1 because it's probably going to be too far. Let me see if I can go to H1. If I can go back that far. Yeah, perfect. Okay, so now you can see the structure a little more clearly. Again, I got in the trade. I entered the trade impulsively. Like this is where like me analyzing. Like I said, I don't really back test and I don't really journal, but like when I do take a trade, I kind of like, okay, well, what did I do? Like, what did I see when I entered the trade, and how could I have improved, and why was what I did wrong, or not necessarily wrong, but inefficient, basically. So I had this, the supply on H4. We had that fundamental confirmation with the tapering. But we didn't really have any technical confirmations. Like, yeah, this candle here kind of, it was a bearish candle, but there was no engulf. Like, it's coming off of a huge momentum candle here. So, you can't stop a bullet with a piece of paper. The market, it takes time for the market to kind of feather out a bit. So I got in on Friday here, then the market closed. And then again, like I had the stops like somewhere up here. And once it broke up, I was like, okay, I need to give it a little bit more room. And this was Asian session. And then we started getting some decent bearish closes here. We had a strong engulfing here. Again, this is when the market kind of broke structure. It made that first new low in H1. We have higher low, lower high, lower low. This is again why like I always let my trades have room, because here if I had messed with the stop loss or tightened it up, or those manipulations happen. Just because it makes a lower high doesn't mean it can't just pop up and still be valid. So I'm kind of trading that overall move. I'm not just trading that like so intricate like that. But yeah, so I was up a good amount. Here this was this was Sunday. Yeah, so this was Sunday. This was Monday. I believe I was up around 100, something here, and then I was down a good 100, 150 here, and then here this was Tuesday. I'm up. I remember I think it was 450,000 here, and then this was that quick fast move that happened. The candle closed here, and then in like in like 15, 30 minutes, it was back at break even, just like that, like from 400,000. So because I think some of my entries were like like around here, like some of the entries went back to break even. I don't know if it was exactly like what the numbers were. I'll go over the screenshots, but yeah, then this was pretty much the worst part of it. Was trying to think. I think again I went into, I don't remember exactly which day I closed. I believe it was here is when I closed. This was the worst part of it though, was London session. No. Was it here or was it here? No, I closed it out. Okay, this is what I did. This was when I was the day I was up 450, and then by this point here I was down 250. So like by the morning, by the night, it was I was in some shit, I was really upset, and I just went to sleep. I was this close to the stops, like it was
How much would you have
15,
lost?
probably like 300,000.
Jeez.
So it would have been half my account at that point. So the risk reward wasn't that great. Like, as far as where I closed it, I closed it for like pretty much like a 1-to-1 or like a 1.5-to-1. But yeah, I think around here is where I closed because I saw it made a lower high in like H1. We had a night. I think there was news that came out here at like 8 a.m. or there was something that came out, and then once I saw it kind of popping back up, I was like, all right, I'm good. Like I'm good. I've had enough from the roller coaster, and I'd like to get off the ride, please. And then this was NFP. NFP was here on that Friday, and then the next following week is when it actually really started tanking, and it would have obviously it shoulda, coulda, woulda. It would have been an insane trade, but I ended up scaling back in the trade. I got back in. I caught entries here. I actually I had a pretty sick trade here where I took like 200 points out of the market, and that this was my next biggest day. Like this day was a $300,000 day, and then this one was like a $390,000 day on this trade. So I ended up getting back in. I wish I fucking held and scaled in even more because it really
Oh,
I left a lot.
yeah.
I left a lot of money on the table. Let's just say that. I'm not going to calculate it because I don't want to be upset right now. But
I can see why though. I mean, like to sit through all that
yeah.
is
And it's
gonna
so
be
uncertain.
tough.
It's so uncertain, especially with it coming so the manner of which it came so close to my stops, and it's just I didn't really it would have almost hit probably here too. Like it was
Yeah.
very close. It was very very close. So whatever. But yeah, I've really, like I said, like I was trading off the daily, like as far as the analysis for the trade, the confluences were really, pretty simple. Like I said, we had that structure, this was that daily structure break, made that lower low. And then here it actually was a perfect, 88.6, retracement, from this high to this low. You see the 88.6 is right here. So, also, in conjunction with that quarter point, 5,500, we had 1, 2, 3, 4, 5, 6, 7, 8 and almost 9 days of consolidation in that one zone, and a lot of rejections. The first target on the trade was actually this daily demand here, where it tapped into it. I ended up closing the day before, so it would have hit my target the next day. And then I had lower targets, beyond that. But yeah, it was pretty straightforward. It was that the fundamental confirmation, the breaker structure on the daily in H4, the H4 supply zone, the quarter point. Just that's what I do when I trade is like I take, I have 10 or 15 different confluences that I look for. How many can I find for this trade, and just combining as many of them as I can pretty much.
Awesome. Now, do you want to jump into the current
The
price and
current market. Yeah,
let's see how
definitely.
you
So
break that down.
yeah, so the current market is definitely interesting. I mean, I personally, like anytime I look at a chart, like I always zoom out. So like if we zoom out on this chart, like we are so high. Like I know everyone says stock markets, they go up forever, they just buy stocks and you'll be good. Personally, like I don't necessarily believe that it's always gonna keep doing that. I mean there's definitely drops to be had along the way, when I had that trade where on US30 where I had the floating profit, I shorted US30 like up right before it crashed in COVID. I actually I was there on that move. I think it was just I think the market is very very oversaturated, overinflated right now. The Federal Reserve has been injecting so much money into these markets every month. I think it's like $120 billion, if I'm not mistaken. So now, with that fundamental understanding, like, hey, the Federal Reserve is already, they've already said we're going to raise interest rates this year. So that's coming. That's going to be a very big weight for the indices. And just kind of pulling back all that. The inflation is so bad right now. Inflation is really, really bad, and it's just getting worse every single day. So they need to do something to combat that. Otherwise, people are not going to be able to afford everyday groceries and things for themselves. So I definitely see a big correction coming in 2022 still for this market. I'm still going to be looking to short it because like I'm not going to buy at this all-time high. Like it just doesn't make sense to the way I trade. And we can already see, we're already kind of we already started like the structure on the daily is starting to look a little bit bearish. Like it's definitely been grabbing some highs. I don't really like to liquidity grabs. I hate saying that term, but it is a thing. It definitely does happen where the market kind of seeks out, like the market understands like how, how it how people flow in and flow out of the market basically. So like analogy I like to give is like, imagine, people swimming in a pool and like there's eight, or 10 whales around the pool, like kind of splashing the water around, and they make it look great. It's calm for everyone to come swimming, and then they just go with their tail and drown everybody.
Yeah,
So
that's cool.
that's the way that I look at it, is like, because it's true. Like in the forex market, there's 10 entities that account for 80% of all the volume. So it's Citibank, Bank of America, Deutsche Bank, JP Morgan. You can look it up, but they do 80% of all the transactions. So you have to, you want to flow with them, you want to swim with them. So right now, like it seems to me like we're kind of just, we are trending upwards, but I wouldn't be surprised for us to at least come down into some of these lows, especially with the looming rates being raised and things like that. And we already have, the market is already showing us in this area, like we have been trending upwards but it's starting to slow down. If you look, like, we've been getting some pretty decent drops here. We're still, overall, we are making higher lows. But we're struggling. Like, if we go to the weekly and we go to even the monthly, you can kind of see, we had some pretty strong rises here, and now we're starting to get some bearish closes. We're kind of fighting and struggling a bit, even though it is pretty strong. Like, we've had some strong monthly closes too. So I'm not like, too pressed to jump in any trades right now, but that's just the way I'm looking at it, based on like a macro perspective. But on like the short term, I definitely think we could tap into like somewhere around here. Like I said, quarters theory is big for me. So like 35,000 kind of lines up, right around here. There's a good demand zone here. And I wouldn't be surprised for us to tap into there. We kind of already like broke structure. We had like a higher low. We had an engulfing here, kind of like a lower low, and then we made a nice lower high here. So it definitely looked a lot more attractive earlier today. This wick is definitely not the best wick, but it's seeming to me like, the weekly candle is about to close too. So this is a variation. If you combine these two candles, these two bodies overtake that last body here. So we're starting to see the sellers kind of step in a little bit more. So that's kind of what I'm anticipating. A lot of exhaustion up here. Pay attention to how the actual candles are closing on the week to week. Exhaustion is big for me. Like, wicks are really, really important. So, yeah. And, it is, like I said, I'm not going to lie to you. And like, I'm going to call a spade. Like right now, like, market is still pretty bullish, but I think we have room to retest these higher lows. So we'll see, what it does in the coming weeks.
Hey guys, ever wonder what broker I use? Well, I use these guys, Hanko Trade. Look, it was a no-brainer for me because I was looking for a broker with really good trading conditions and one without any leverage restrictions. Look, also, by joining Hanko Trade, I was able to cut my cost of trading significantly with their super low commission of $1 per 100K. Look, if you want to find out more, check out hankotrade.com, or there is a link in the description. Right, guys, let's do this wrap up. Where did we end up? So where James left us was at the end of this week. So that second bearish candle there, that's where we ended. He said it's probably going to push down and reach these lows, one low, two low. In fact, it reached the third low there almost, so a fourth low there at almost. So he was right. It came down and retested not just those two lows, but all these lows. Bounce back up. All right, so he got it right. Plenty of action in here for him to go short. So whether or not he did, I don't know. But anyway, where are we today? We're in this is the 8th of February, and we've had a couple of bullish weeks. I think this week's probably going to be bearish, at least to about here, and then we're probably going to get a big drop down. So that's my prediction. Just that's where I think we're going to go. We're probably going to have maybe a bit of a stall here, and then we're going to push down even further. Bit of a gamble. Look at where we are. We're on a massive bull run, so let's see what happens. All right, guys, let's get on and wrap up this video. All right, guys, thanks for watching this video with James. Awesome stuff, mate. Seriously, it's really good to, if you guys want to get context around what he's just talked about, then definitely check out the podcast that we shot, where he goes into detail around some of the thinking around that trade that got him to 7 figures. So, James, before we wrap up, what's the best way for the guys to get hold of you?
You can find me on Instagram at James Storms. If you guys have more personal questions or mentorship or this or that, I do signals and I have mentorship as well. You can reach me at James Storms on Telegram. It's probably a good place to reach me. That's JAMESSTORMS, James Storms.
Brilliant. Well, look, guys, as I said, please go and check out that podcast we did. It's fantastic. Really going to get you motivated.
Super value. Like I really was super honest and just I'm always honest, but I really tell you guys like this is what I did. This is the situation I found myself in, and this is how I got myself out of that situation.
Yeah, you hear the ups, you hear the downs, and it's so transparent. You guys got to go and check that out. Also, whilst you're over on Trading Out, do check out my Robot Builders Club. I teach you how to build trading software for the MetaTrader 4 and MetaTrader 5 platforms, fully automated, no coding required at all. Thanks for watching, guys. Remember to hit subscribe, hit like, click on that notifications bell, click all, and we'll see you in the next video.